Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the best growth stocks that you guys need to buy. Now, a lot of these stocks aren't going to be traditional growth stocks like Tesla, like Amazon, Google. These are going to be smaller companies that are still growing and definitely carry a little bit of risk, but also a lot of reward for the next 2 to 5 years. That's kind of my outlook on most of them. Not to mention, guys, I think it's always smart to be diversified. Have some money in the S&P 500, have some money in value stocks, and overall, be cautious with your growth stocks. Make sure that they're in good sectors and overall just are dominant companies. So the very first one that I am buying is ticker symbol. This is one that I bought in the past and I plan on buying it again this month. SQ. This is Square. So the reason why I love Square is because of the overall momentum that we've seen from this stock, right? It's gone from $32 all the way up to $283 in little less than a year. Now it's at about $247. Not to mention, guys, Square is more than just Square, right? They own billions of dollars in Bitcoin. They have credit card processors for small businesses. They make a ton of money off the Cash App and transactions. The company is a fintech stock. It's not going anywhere anytime soon. They recently got approved to now offer loans, and that's just going to be more money for Square. I really think that this is an absolute steal just because of the overall rate of return, and a lot of smart analysts are saying that this stock can easily hit 350 by the end of next year. I think that's a very fair expectation just because of the rate of return we've seen. Now, the next one that I'm going to be talking to you guys about is ticker symbol SHOP, SHOP. Now, this is Shopify. Now, the reason why I love Shopify is one, we have a huge and beautiful upward trend. Lows here at around 117, highs here at around $1,600. This return, if you guys would have bought it, is just about 1,500%. And the reason why I love Shopify too is because of the rate of e-commerce isn't going anywhere anytime soon. If anything, it's more convenient to shop online and not, it's easier to shop online and not go to brick and mortar stores. Brick and mortar stores are definitely freaking out. There's a huge shift towards e-commerce, and Shopify is ahead of that sector. It's the front runner in the sector, and I'm really excited to see where it goes. Now, the next one that we're going to be talking about is one that I've talked about in the past. I think this is a beautiful growth stock, and I'm highly invested in it, and I'm buying more of it. The reason why is, one, SOFI Technologies is another fintech stock, so it's very similar to Square. They make a ton of money, and they have a investment account. It's very similar to like a Robinhood, but this is a little better because you can have different accounts. You can have a Roth IRA, traditional IRA. You can have loans, credit cards, all in one platform. So instead of going and bouncing around with different apps, SOFI keeps everything all in one place. Not to mention, you guys can see every time that this thing is hit around $15, we get buying pressure. So buying pressure, buying pressure, buying pressure. So I think right now would be a good opportunity for a swing trade in the month of August. I am super excited. I think that this thing will probably go from 15 probably to about 24. If you set your stops below 12, you're risking about $3 to make 10. So that's a perfect risk and reward ratio here. Now, the fourth stock that I want to talk about is Coin. This is Coinbase. So this is a recent IPO. You guys can see just by looking at the IPO, it didn't do very good, right? This is one that I've been buying for a minute now, and I'm honestly down a little bit, but I'm planning on buying more to average my position down. You guys can see the IPO was beautiful the first day and has just been selling off ever since. But it's kind of been in this stagnate where it hasn't been going up or down. It's just been kind of consolidating, right? You guys can see the major support here is around 210. Resistance is about 263. So you can make some good swing trades just by looking at that. So I think that if I hop in right now at about 240, if I can get it at around 235, my average share would be about 260 since I did buy up in here. So this is just one that I think is a beautiful stock. It's in a growing sector, and it's not going anywhere anytime soon. Now, the fifth stock is NEO. This is just another fantastic electric vehicle stock. You guys can see the rate of return we've seen from NIO. Lows here at $12, highs here at 66. It's sold off to about 44. I think there's room from 44 to 55, setting stops below 40. You're risking about $5 to make 10, so it's a decent risk and reward. Not to mention, NIO is the electric car manufacturer based out of China. It's growing at a very, very rapid rate, almost doubling in revenue every quarter. And I think that this is going to be one we wish we bought more of, right? Because everybody has a little bit of NIO, but I'm going to be buying a little bit more. I bought in at around $11 and about 22. So I'm up quite a bit. It's just I want to get some more solid price points before this thing takes off. They are pretty much they compete with Tesla overseas, not going anywhere anytime soon. So another fantastic stock is ticker symbol LMND. This is Lemonade Insurance. Okay, so this is a insurance company, and the reason why I love them is because they really focus on millennials. They focus on younger people. They make it very easy to get insurance. Most of the time, like when I bought my house, I had to go through insurance agents and all of this, and it took a lot longer. The difference between the standard route for your insurance and Lemonade is Lemonade streamlines it, right? You can go on the app, you can put in all your information, and you literally get a quote that same day within like 10 minutes. They make it very easy to almost hop in that driver's seat, take a lot of the pressure off you. And overall, they make a lot of money. They're bringing in millions of dollars. You guys can see the last earnings. They did miss it. But I think just with the overall return and growth we've seen from this, I think a lot of people are going to turn for companies like Lemonade with the convenience and everything like that. So given that it sold off from the highs at $188 to about $88, that's about $100 a share difference. This would be a good opportunity to hop in, hold it for a couple of years, and see what happens with it. You also could do a swing trade if you hop and you pretty much set your stops below 80. You're risking $7 to make about 25. So it's a decent risk and reward, but overall, this is going to be one that definitely is a little more volatile than some of the other ones we've talked about. Now, another fantastic one, guys, that I think everybody should have, maybe a little bit of. This isn't so much a growth stock. This is just a real estate REIT. This is ticker symbol O. So you guys can see this beautiful return. But the reason why I love this is because they give you a dividend every single month. So you can compound your money very fast. Not to mention, look at the return we've seen from this, right? You guys can see it tends to trade in between 60 and right now it's about $70 a share. I think the return on this would be absolutely fantastic. I am a little concerned just because they do have a decently high payout ratio, but if you understand that this is going to be a little volatile for a REIT, you'll be just fine. So pretty much, guys, the last and final stock that I want to talk about is ticker symbol SNOW. This is Snowflake. Snowflake is a data company. They make a ton of money, and just because that this thing hasn't really done much, right? You guys can see it's exploded up to about $429, sold off back down to about $184. This is going to be a more volatile one. Warren Buffett invested in this. A lot of huge hedge funds are buying this, and this is just one that I'm going to take a stab at, probably putting about 2 to 3% of my portfolio into this and just seeing what happens. I did buy it in the past right on their IPO, and obviously I didn't make any money and I didn't really lose any money. I'm just kind of in the stagnate, so I'm going to be buying a little bit more and just seeing what happens with it, but understanding that this is still a volatile stock. Now, a couple other ones that I think everybody should be looking at this month would be companies like Delta Airlines under 40. This is a good one. We have Beyond Meat. We have a variety of picks for this month, right? We have Robinhood with their IPO. We have another one that we talked about, SOFI, and then Disney. These are going to be the ones that I am buying, but these ones that we talked about today are going to be more of the growth stocks, higher risk, but also higher reward. So I hope you guys enjoyed it, and overall, I hope you guys got something of value, and we will see you later. Remember to stay happy, stay positive, stay safe.